Good morning, good afternoon, good evening. Whenever you are watching this, we are into the third week of 2025. It take you a minute to get back into that rhythm, right? I want to say for those of you who are this is the first time meeting me, I'm none other than Patrice Elberry EA, aka the Tax Cop. I'm so glad you've tuned into this week's video. We are going to get straight to it. But before I jump into it, y'all can't see my shirt. I'm gonna get in my chair, right? Y'all better. Okay, so let me see if I'm gonna turn it to the side so I don't hurt myself. It's on wheels and I can't lock these wheels. So what's gonna happen is I'm gonna show y'all my business bestie. Can y'all see my shirt? Can y'all see my woo? I'm turning. Woo! Okay, we're gonna stop. Harper Business Solutions. Y'all can't see the R. Can y'all see the R? Can you see the R? Harper Business Solutions. I want to give you a shout out. Thank you for my box. Thank you for my swag box. That is my business bestie. She has been in business for 10 years. Y'all saw when she broke stuff down for the nonprofit video for me a couple weeks ago. If you have not gotten that and you would love to get it because you want to know more information about waxing deep on nonprofits, that's my girl. She is based out of North Carolina. She has a full service accounting firm and truly, truly, truly is an inspiration. Loves the people, wants to teach you opportunities, how to reach beyond numbers. And she's in year 11. She gave us swag boxes for her year 10 anniversary. Beautiful, beautiful website. Great things coming. We have some educational opportunities. She got a book that she just issued. I can't wait for my signed copy to come in. So I just wanted to shout her out real quickly to make sure she knows that I truly appreciate her. Love my box. Can't wait to wear my hoodie to rep hard, rep hard in these streets, in these accounting streets, to let people know that I am on Team HBS along with Team TTE, aka Tax Cop Crew. We hold it down. I'm so grateful that we are able to collaborate in the manners that we are doing. Great things coming. Her academy is launching. She obviously got me working somewhere in this academy doing certain things for her. So I'm grateful to her. I'm grateful to God. I'm grateful that I've known her as long as I have, and so excited for her as she goes into the back half, right, of her career journey, being an entrepreneur for 10 years, just as I'm heading into full-time entrepreneurship in year 5. So just wanted to shout her out real quick. Got it on. Y'all can't see. That's what's up with that. Y'all like that gold, that fancy? They fancy. We over here arresting and getting all the perpetrators, aka all the expenses, and getting that stuff straight. So this week I want to break it down for you all, talking about credit, the difference between credits and deductions. And of course, I have to go to my trusty dusty favorite website, the source, none other than IRS.gov. All right, so we at IRS.gov, y'all. Y'all can see it. Credits and deductions. I want y'all to know the difference between the two. You can use credits and deductions to help lower your tax bill or increase your refund. And or, because you can have a combination of both. Credits can reduce the amount of tax due. It's directly a direct reduction. Deductions can reduce the amount of taxable income. All right? So for y'all know taxable income, I call him the king. So deductions are happening earlier in the tax return. They are actually happening right before we get to the queen and right after we get to the queen, right? So we got deductions above the line and below the line. So that we can figure out what our taxable income happens to be. And then from there, we calculate our tax that's due. And from that tax that's due, that's where credits slide in. Credits can slide in if they apply to bring that thing down, that tax amount that you owe, that payment, the money you owe them people, to reduce it even lower. Okay? All right. So let's go back and go to IRS.gov, right? It says credits and deductions are available for individuals and businesses. Now, the Inflation Reduction Act of 2022 provides new and extended credit and deductions for individuals and businesses. All right, so that came out in 2022. We got Tax Cut and Jobs Act that is going to sunset in 2025. So I need y'all to understand, we got the overall code. We have different acts that happen and make things happen. We don't have too much activity going on this year, but we'll break down some of those highlights for y'all soon. right? We'll probably do that next week to say, okay, this is what the highlights are, the sexy stuff they're looking at in 2025, so y'all can be ready. But you need to understand that there were extra extended credits and deductions that happened in 2022, and some of these things are going to or were discussed to be coming back. We'll see what happens with this new administration. Okay, so let's go and look at what some of these things are. Right, so there are deductions and credits that can be taken for individuals. That's on your 1040. For businesses, so that's your 1065 partnership, 1120 C corporation, 1120 SS corporation. And then we have tax and exempt government entities, right? So then that's our 990s, our nonprofits and things of that, right? So you got several different deductions. Earned income tax credit, child tax credit, education credits, adoption credits. You got your clean vehicle credits, all those people with the Teslas and the EV vehicles, home energy credits. Now, I'm going to click on this home energy because I want to break it down just a little bit further. Elective pay and transferability. And then we got itemized. These are your deductions, right? My above the line and my below the line deduction. If you are one of my clients, then you happen to know what I go through the spiel, so I can explain to you how we get to our king and our queen and the king. But I'll go back to it, right, and how I figure it out. Itemized versus standard deduction. And I go through that spiel when I do your review of your tax return. IRA deduction limits, right? And then charitable contributions. So certain things end up at certain places. You see, these are our deductions. These are some deductions and credits. And these are our main credits that we'd be looking for, right? So then we got what happened during the panini, right? What happened during the panini was we had the employee retention credit. And that's been a whole ruckamarore and fussing and all this kind of stuff. Can we have it? Can we not have it? We got a work opportunity tax credit. And in some of these credits, you'll see that will duplicate themselves at the state level sometimes, right? We got forms for business credits and deductions, and for my real estate people and things that are really like, how can I get around from some capital gain taxes, etc. We got opportunity zones, right? So I will make sure that we include this link. Why? Because let's do a click. What happens? Because the IRS be doing stuff. Boom, home energy tax credits, right? So we're talking about home energy tax credits because a lot of people come to me and be like, Patrice, I got a new, let me show y'all my face. I got a new washer and dryer. I got a new washer and dryer too. I ain't gonna lie. That thing is the bomb. I can do more in less time. Don't have to do so many loads. However, just because I got a brand new washer and dryer does not necessarily mean I get to deduct that on my tax return or get a credit for it because it says it's energy saving. All right, so I want to put this in perspective because I run into this a little bit more often than not. All right, so let's go back to it. Who can claim the credit? You can claim the credit. You can either claim the energy efficient home improvement credit or the residential clean energy credit for the year when you made those improvements. All right, so when we're talking about energy efficient home improvement credit, we're talking about exterior doors, windows, skylights, insulation, right? Central air conditioners, water heaters, furnaces, boilers, heat pumps, biomass stoves, and then if you did a home energy audit. Now, these numbers are a little bit different because now we're doing 2024 taxes, but you see 30% up to a lifetime max of, you only get a $500, right? And for 2023 through 2032, so in 2024, you get a max of $1,200 for heat pumps, biomass stoves, boilers, etc. There's no lifetime limit, right? All right, so now when we're talking about residential energy, clean energy credit, keep in mind, this is what they're talking about. Solar, wind, and geothermal power, solar water heaters, fuel cells, battery storage. And that's beginning last year. Right? So these are amounts. 30%, no annual maximum or lifetime limit. 26%, no annual maximum limit. And then that's in 2033. So right now, in 2024, we get 30%. Then in 2033, it's going to go down to 26%. And then 2034 is going to go down to 22%. All right? So, y'all, don't be trying to harass your person and be like, but I got a brand new stove. and it stated energy efficient, and I got a brand new uh, dishwasher, right? And try to claim the residential energy. This is why. So if you get any pushback and people like, oh, but you're not looking out for my best interest. I made a big purchase and you not. This is why. Because this is what the IRS is putting in those categories. Now that you know this and you're like, wait a minute, I did have solar, but I didn't go back and I didn't realize that and I didn't get it to my tax professional. You might want to go back and see if you can go amend that return so that you can go get your 30%, right? No lifetime limit on this and take advantage of it, right? To see if you can get that credit and see what that does for your taxes, right? So I want you to keep in mind, and like I said, what we're going to do is we're going to make sure, let's go back, we're going to make sure that everybody gets this link to where this discussion is on where the credits are so that you can go through and say, you know what, I want to make myself a little bit more intelligent in this area. And because I want to make myself a little bit more intelligent and the tax cop is willing to share the link with us, right? This is what I'm going to do and go through here and see if there's anything that I can take advantage of credit wise. Because remember, that credit is after we done figured out what the tax liability is, what you owe them people. If there's some credits that I might have left on the table that nobody told me about that I could take advantage of, let me go see if I can go work with somebody to see if that return can go get amended. I'm here to make sure that you abide by the law. I am not going to be tippy. I'm not going to go cross the law, but we're going to make sure that if there's ways for us to be able to find tax savings for you, leverage the code that is beneficial to you, we're going to make sure that we let you know what that is. A lot of people come and they say, hey, I want write-offs, I want this, I want that. But I want you to understand the correct terminology, right? Because the IRS going to send you letters and they not going to be like, so you wrote off too much. That's not what the letter going to say. They're going to say, we're going to disallow these expenses. We're going to disallow this credit. We're going to disallow this deduction. And if you have no idea and you're panicking, let's say you open the letter and then stick it in the drawer, you're panicking, that puts you in a real harsh situation if you don't know what they're talking about. So what we're going to do for you this week, we're going to make sure you get this link. I want you to take it upon yourself, do your homework, go through the links and say, you know what? Hey, now I understand this a little bit better. And if there's more you want to know, you know how to reach us. Go ahead and leave a comment. Let us know what topics or some questions that you want to know about. And here we go. Do not forget that there is going to come a time where if you want to be in a safe haven to be able to ask accounting and tax questions in a way where you're not going to be judged, right? That we are opening up a membership to be able to allow you to have that safe space, to be able to come in, ask those questions in a group setting so that not only you can learn from your peers, so that you are better able to leverage the tax code, but you are also able to do what is best for you and your family in a safe environment with none other than yours truly, the tax cop. All right, so until next week, I'm going to holler at you. Peace.